Hello, friends. Let's talk about Robinhood. It's one of my favorite companies because, all the youngsters that I speak with who are into trading, who are into long-term investing, they all seems to have Robinhood these days. So one of the best ways to invest in a company is when you use the product and you like it, when you see your friends use the product and like it, when you see, your clients, your customers using the product and they like it, then you know this company is most likely is going to be successful. So that's why it is one of my favorite companies. Although right now it's struggling. I think the stock was trading at almost 140, 150, a few months ago, and now it's down to $80. So it's down almost 40, 50%. But I'm still bullish on the company. But I'm not going to just randomly buy Robinhood. So I want to share some insights into bull and bear case so you can understand some of the fundamentals about the company. So if you're thinking about investing in Robinhood or you already own Robinhood, then I think this information is going to be extremely helpful to you. Now, those of you guys who don't know me, I'm not an investment advisor. I don't run a hedge fund. I don't sell you stocks. I don't really have anything to sell you. I'm a tax advisor. So if you need some quality tax advice, if you're a trader, you make a lot of money in real estate, you make a lot of money in stock market, you have a high W-2 income, you have a great business that makes you a lot of money, and you're trying to figure out what are some of the best tax strategies, then I'm your guy. So reach out to me via taxcodeadvisors.com. If you are in the Austin market, then I do have an event coming up on May 16th. So that's going to be a half-day event from 9 a.m. to 3 p.m. We will have a breakfast, we'll have lunch, we'll have plenty of time networking, and I'll talk about all my favorite companies, what's happening with them. I usually do this in a meetup format for a couple of hours, but this time I'm doing it a little bit at a grand scale, so that way we have 5-6 hours to talk about this stuff in great detail, and we have a lot of food that day as well. So if you have any friends, family members in the Austin market, then please recommend them to come to this event. Go to taxcodeadvisors.com to register for the event. There's no charge for it. It's completely free. All right. Having that said, let's talk about Robinhood. And I promise you that today you're going to learn something new. That is always the goal, by the way, that, when you share something, share some useful information that somebody else can learn from it, and hopefully they can make a little bit of a better decision. I do know many of you guys probably already own Robinhood, or at least you use Robinhood, but do you really know how Robinhood actually makes money? I think most people probably have some idea that they probably make some money when you buy and sell stock. But Robinhood claims that they are a commission-free stock platform. So how do they exactly make money? Well, they make money 4 different ways. Most of it is transactional based. Every time a user buys or sells a stock, option, crypto coin, or a futures contract, Robinhood earns a small fees, usually known as a spread. This is the core of how they make money from trading activity. If markets are quiet, crypto is boring, or retail investors stop trading, this revenue drops fast. Q4 2025 crypto transaction revenue for Robinhood fell 38% in single quarter, purely because Bitcoin enthusiasm cooled. This is the single biggest risk to the quarterly earnings that will be reported tomorrow. By the way, that's one of the main reasons that I wanted to do this video today instead of waiting a couple of weeks from now, because I think a lot of people will be jumping into this trade tomorrow. So it's a good idea. If you want to get into Robinhood, then do listen to this video. I think you're going to find a lot of value here. Now, this crypto revenue, it's such a big deal for Robinhood that, back in 2021, this was 75% of the revenue. Now it is 55%. Robinhood is actively reducing dependency on crypto revenue, which is good for long-term stability, but means for the time being, the risks still exist. So keep this in mind. Second thing is payment of order flow. This is the revenue stream number 2. Payment of order flow, PFOF. This is a controversial one, and this can actually hurt Robinhood a lot. So if you don't know about this, then I think you're going to find a lot of value in this video. And by the way, if you do find this value in these videos, then I urge you to do a couple of things. Number 1, subscribe to the channel. So obviously you get to know about more information. Number 2, join the free WhatsApp group. So if you are not already part of the group, then send me a message through taxcodeadvisors.com, and I can add you to that WhatsApp group so you can learn more about these things. And number 3, help me out. Maybe next time you're thinking about doing taxes, reach out to me. If you're setting up a company, let me know. Or if you need any other kind of tax advice, then reach out to me. So those are some of the ways. And by the way, don't forget to to tell your friends and family members to come check me out. So hopefully I can help them as well. All right, let's get back to PFOF. So how does that work? Well, when you click buy 10 shares of Apple on Robinhood, your order doesn't go directly to the stock exchange. Instead, Robinhood routes it to the large trading firm like Citadel Securities or Virtue Financial. They are the one who actually execute the trade. These firms pay Robinhood a small fees, a fraction of a cent per share for the right to handle your order. This is payment for order flow. Now, if you think about it, how much would I pay you if I get to know your personal information? So if I was Citadel or some other company, some other big guy, and I get to know where all the stop losses are. I get to know, how people want to execute their trade. If I have all that information in this age of AI, how powerful is that? So I think these companies that are associated with Robinhood actually has even a bigger advantage. Now, can one day Robinhood, think about executing their own trades? Maybe, but for now, that is not the case. So the question is, why do these big firms pay Robinhood? Well, large trading firms can make tiny profit on each trade by buying and selling between your price and the best available market price. I mean, obviously, they're not doing it manually, they're using computers to do this. So they pay Robinhood for access to millions of retail order because retail traders are generally less sophisticated than institutional traders, easier to make money on. Simply thinking, when you and me go place a trade, what do? We buy it at the market price. We don't set up the limit price. And because of that, for most of us, it doesn't really matter. If I pay 10 cents extra for an order over a grand scheme of things, that's nothing. But for somebody who is doing millions of these trades, that can mean a lot. So these companies make a lot of money. However, this practice is controversial. Critics argues Robinhood is effectively selling your trade to a middleman rather than sending it to the exchange that might give you the best price. The SEC has investigated whether customers get slightly worse price as a result. In 2021, Robinhood paid a $65 million fine to the SEC for misleading customers about PFOF. PFF, PFOF is already banned in UK and European Union. The SEC has repeatedly threatened a US ban as well. So, if this practice is banned in the US, Robinhood loses a meaningful chunk of their transactional revenue overnight and must rebuild that revenue with something else. This is perhaps one of the biggest existential regulatory risks to Robinhood right now. Number three, interest income. I think this one is easy to understand. Robinhood earns interest in two main ways: on uninvested cash sitting in customers' bank accounts. Well, I shouldn't really say bank accounts, more like brokerage accounts. They sweep it into money market funds and earn the spread between what they pay customers and what they earn on those funds. So, there's a little bit of a small amount of money to be made there. And then second, they make money on margin loans. When a customer borrows money to invest, called trading on margin, Robinhood charges them interest, typically 5 to 8% per year. Now, just today, I was talking to a gentleman, 81 years old, and he does a lot of trading. But he said, look, I make hundreds of thousands of dollars trading, but I don't really pay any interest to whatever brokerage he might use. I was quite surprised. The solution was very simple. He buys things the same day, he sells them the same day. So he's using the margin, but effectively not really paying any interest income. Well, this is what you get when you get wisdom for somebody who is 81 years old and has been investing for many, many years. So thank you so much for giving me that tip. Although I don't play those games, I think I'm not really good at it just yet. Maybe one day I'll get there. But sounds like a plan because companies like Robinhood do make a lot of money out of these interest income. Now, net interest income is far less volatile than trading revenue. It grows with the size of the platform's assets, regardless of whether markets are going up or down. In Q4 2025, net interest income hit almost $411 million. Can you imagine that? $411 million went to Robinhood just out of interest income. How many of you guys can really do something like that? And that number was up 39% year over year, and it is becoming the financial anchor of the business. In matter of fact, my expectation is when the earnings are reported tomorrow, I think this net interest income going to be even more up. Why? Because of two reasons. Number one, take a look at the margin accounts right now. People are piling up on margin. Some people are piling up on the margin because they are bearish on the market. I certainly was at one point, so I was hedging. So I certainly was on margin at that time. Some people are extremely bullish on the market, so they are borrowing the money as well. However, this also comes with a risk. When the Federal Reserve's cut interest rate, the spread Robinhood earns on cash sweeps compresses. Lower rate equals to lower net interest income. This is why Fed rate policy directly affects Robinhood revenue. So keep that in mind as well. And then the fourth way Robinhood earns money is subscription. And I love that model. Subscription is perhaps the best one out of all of these. They charge $5 a month or $50 per year premium membership that gives users 5% APY on uninvested cash, much higher than a typical savings account. So a 3% match on IRA contribution. So that's like a free money for somebody who wants to move funds to Robinhood. And they also get access to margin investing. Morningstar professional research reports and the gold card. What is a gold card? Well, it's not really made out of gold or anything like that. It's just a Visa credit card with 3% cash back on every purchase. No category restrictions. This is better than most premium credit cards out there. They charge, $400, $500 annual fees to give you that kind of benefit. Robinhood offers it for only $5 per month. So 600,000 people already have this card, and they spend almost $10 billion per year on it. Robinhood earns a small percentage every time somebody uses the card. By the way, this is known as interchange fees. So every time you go use an ATM, you use a card, there are multiple parties involved, and one of the fees that people earn is interchange. So why subscriptions matter to Robinhood? Well, a user with a gold card is deeply embedded in the Robinhood ecosystem. They are unlikely to move their brokerage account to Fidelity because they will lose their card. That 5% rate is very attractive to them. The IRA match, the research tools, each subscription product Robinhood adds increases the switching cost and obviously the pain of leaving. So you can see this is how the Robinhood earns money. Now, personally speaking, I'm super excited about the future of Robinhood. I think that is what we need to focus on as investors. But market is full of a lot of traders. So if the crypto revenue is still down, stock will most likely get hit tomorrow as well. But if you're a long-term investor, then I want you to hear what I have to say because I think you're going to find it very, very exciting. Well, prediction markets. This is the fastest growing and most controversial new product. Robinhood lets users buy and sell event contracts, essentially bets on whether something will happen. Will the Fed cut rates in June? Will a specific team win the championship? Will inflation hit 3%? User buy yes or no contract that pays $1 if they are right and $0 if they are wrong. It's a financial speculation on real world events. Now, why am I so excited about that? Well, they hit $300 million plus annualized revenue run rate in its first year, the fastest product ramp in Robinhood history. Unlike crypto, which has bear markets, there's always an election, there's always a sports season, and economic data release. This provides Robinhood year-round activity. Remember what I said earlier, that Robinhood, one of the problems with Robinhood has been this reliance on crypto revenue. But now, if this product continues to grow, in a couple of years, that would really not be an issue. In January of 2026, So just a couple of months ago, you might not have even noticed, they actually did an acquisition. Robinhood spent months and significant capital acquiring a CFTC licensed derivative exchange called MIAX with another partner. The CFTC, Commodity Futures Trading Commission, is the US regulator for derivatives. Having a licensed exchange means Robinhood can now operate prediction markets legally and even host other brokerages, prediction market orders. So this is really good for them. Then on top of that, Robinhood is actually building a brand new exchange from scratch, and they are expected to release it in mid 2026. This would allow, or this exchange would allow, institutional players to trade event contracts, opening up a completely new market that doesn't exist. Right now, it's, general public who is able to do that. But can you imagine once the institutional players start to come in? And by the way, some of you might be thinking, well, I don't like this idea of trading like this. Well, I hear you, but understand this. Trading can also be your hedge, right? So, for example, you might have an option or you might have a stock in a particular direction, but maybe you want to hedge that. And this is where prediction market can also come back to help you. Now, is this all great? Yeah, on the surface it is. But one of the problems I have is the regulatory risk. On April 21st, 2026, the New York Attorney General sued Coinbase, arguing its prediction market products are illegal gambling under New York state law. Robinhood event contracts work exactly the same way. If they succeed, it could force Robinhood to shut down or restructure its entire prediction market business, erasing one of its fastest revenue streams. So you see how risky things are. Okay, now let's talk about banking. This is something new to them. A full checking and savings account product within the Robinhood app. FDIC insured deposits, debit cards, direct deposits, bill pay. They already have 25,000 funded customers with over $400 million in balances. A user who puts their paycheck directly into Robinhood is essentially making it their primary financial institution, stealing business away from big banks like Chase. Every dollar deposited is a dollar Robinhood can earn net interest income on. The more banking products adopted, the stronger the moat. Now, an individual savings account in the UK with a 2% cash bonus on contributions, the first of its kind in the UK market, was released earlier, I think, February 2026. And they're targeting almost 1 million in savings account in that market. So that is another new product that is just starting to grow. And you start to get the picture, like how fast these guys are actually growing. They keep adding new products. Now, what about all the traders, right? So if I gave you an example of a gentleman I was speaking with earlier today, but if you're a trader, then you're probably not used to Robinhood. You're probably using some other tool. Well, now they have something called Robinhood Legend, a high performance desktop and mobile platform for active traders. Think like Bloomberg Terminal Lite. Includes advanced chartings, sub-second executions, futures trading, short selling, simulated options returns, and near 24/7 index options trading. Why does it matter? Well, it addresses the long-term standing criticism that Robinhood was too simple for sophisticated investors. So they made it complicated. Legend competes directly with TD Ameritrade, Thinkorswim platform. Now, Robinhood isn't just for the beginners, it's also available for the experts. You would think this is it. Do I have anything else to share? You'll be so shocked how much more there is that Robinhood is doing. Check out Robinhood Cortex. If you're not familiar with it, it's an AI powered financial analysis. And we all know that. I mean, I use AI to do my research. I'm sure you do use yours as well. In matter of fact, some people uses AI to bring up the, like a summary of a video. Like I could be spending 20, 30 minutes putting my thoughts together and sharing that with you. Although, by the way, if you're doing that, you are probably missing out a lot, because when somebody takes a couple hours out of their day to share some quality information with you and you trim it down into few bullet points, most likely you're missing out on a lot of information. So just keep that in mind. Going back to Robinhood Cortex. This is an AI assistant built into the app that analyzes markets, generates real time news insights, and helps users build custom technical indicators without coding knowledge. It turns a retail investor into a semi sophisticated one, provides the kind of analysis previously available only to professionals with expensive Bloomberg terminals or research subscriptions. Many of us have a system for buying. Well, I guess I shouldn't really say many of us. Maybe some of us have a system. And we buy based on either technicals or fundamentals or news or something else. Well, now that you will have this AI powered tool, I can imagine in maybe a year or two, you will have an agentic tool that can actually place a trade based on all the data that AI can collect for you. So you don't really even have to be involved. You probably have heard of these companies that basically built you a custom index fund, so you're able to take advantage of tax loss harvesting. So something similar like that you'll be able to build on your own very, very soon. New feature that I think many of you guys will be super excited about in Robinhood is copying somebody else's trade. So a verified community where users shares trading strategies like myself. People can track expert portfolios. So maybe you want to follow Warren Buffett, maybe you want to follow Tim Cooks or whoever somebody else might be out there. And if they make those trades available to you, then you can just simply say, hey, just copy their portfolio and automatically those transactions are done. So copying trading is already enormous in Europe. In matter of fact, there is something called eToro, ETORO. You can look it up on Google. They have built $10 billion business on it. Robinhood is bringing it to the US that is going to tap into the behavioral trend. Young investors want social validation of their investment decisions. In matter of fact, if you go on YouTube or you go to Twitter or other places, you see so many people are just following other people. So you'll be able to do it with a lot more ease in hopefully a couple more months. What about Robinhood strategies? Well, they are now launching a robo-advisory wealth management, a managed portfolio service. You deposit money, tell Robinhood your risk tolerance, and it automatically invests and rebalances for you. By the way, rebalancing is one of the biggest problems. When market is going up, we don't want to sell out because we just think the stock going to continue to go up. But we forget to take profits. So if you have a tool that can automatically do that for you, that would be awesome. Now, currently, most traditional managers charge anywhere between 1% to 3% annually on your overall portfolio value. Robinhood charges $250 for the entire year. And that is really good news for people who don't have access to any wealth management whatsoever. What about Bitstamp? Have you heard of that? It was an institutional crypto company. Robinhood acquired Bitstamp. They're one of the world's oldest and most regulated crypto exchanges, operating in 100 plus countries with institutional grade custody. This gives Robinhood ready-made institutional crypto business with the regulatory licenses across EU and UK, something that can take its competitor many years to build. And this is going to enable perpetual futures trading in Europe, which I already said is a massive market. What about ventures? So Robinhood has launched something called Robinhood Ventures. It's a venture fund, like the way the name is. It's 650 billion, no, not billion, I think $650 million venture fund that invests in late stage private companies approaching IPO. The fund itself is publicly listed, meaning retail investors can buy into late stage startups that are normally not accessible. For example, RVI invested 75 millions in OpenAI at approximately $800 billion valuation. OpenAI represents about 12% of entire RVI fund. If OpenAI IPOs at 1 trillion, that 75 million could be worth significantly more. providing direct AI upside for Robinhood shareholders. So you can see why I am excited about this company over the long period of time. But in the short period, biggest risk I see right now is the crypto. Although I think we'll be okay. Because I think what had happened is people have started doing a lot of trading, markets are all time high, and stock is already down. So there's a very good probability that stock will most likely go up after the earnings because stock really hasn't really moved a whole lot. When market was down, it was down to $70. Right now, it's sitting around $80. So I wouldn't be surprised that after the earnings, if it jumps to $120. So quite possible. But regardless, like I said, I don't really focus too much on earnings. What really matters is your long-term thesis. So I'm pretty sure many of you guys probably didn't know all this information about Robinhood. And now that you know, you understand the risk and the reward for being a Robinhood investor. Well, if I added some value to your life, then I will take that. Thank you so much for sticking with me for 15, 20 minutes and listening to my thoughts. If you want me to talk about a company or if you want to debate, if you agree or disagree with any of this stuff, then please leave it in the comments. But I think Robinhood is one of those generational companies. So I talked about Micron earlier, and I think Robinhood is perhaps one of the second one that is going to do really, really well because they're really moving away from that crypto revenue. Crypto revenue is important. I'm not saying crypto is going away or it's going to die out or anything like that. People say all that stuff. I'm not in that camp. But that's not the point. The point is that Robinhood is executing and bringing new products to the market all the time. There are some risks, as I mentioned, so you want to be careful. You don't want to put a large percentage of your portfolio in Robinhood, but it's a good idea to have some exposure because it's a great company. They have just so much excitement about other products and what's going on. And most importantly, they're growing super fast. They're adding every time they add a product, it just gets more better. And I think once they have this copy feature where you're able to copy other traders out there, I think that is just going to bring a lot of business back into Robinhood as well. All right, guys, thank you so much. And I'll see you very, very soon. And if you're in the Austin market, then please come to my next event. It's happening on May 16th. I'll be there whole day long, and we'll talk a lot more about all bunch of great companies, tax savings, and any other question that you might have. I'll see you there. Bye-bye.